Ladies and gentlemen, let's bring in Larry Shover. He's joining us from Exchange Capital Resources this morning. Larry, last time on, we talked about how, well, I just mentioned the indices have been in a bit of a range. We were talking about how rates have been in a bit of a sideways shuffle. I've been really looking at the March high and the low as the levels that we need to keep an eye on in terms of determining when we start to see directional conviction shift and sentiment start to change. I guess the first question I have for you, is that too wide of a range to be looking at in terms of determining that everything within that range, the March highs and lows again, is basically just noise?
To a certain point, I think, to a certain extent. I mean, the longer we stay stuck in this sideways range, and we're on the upper end of that sideways range compared to where we were even in the summer. But the longer we stay in it, the longer we end up getting what's called like a volume bulge, which more and more volume and making the volatility tighter and tighter. And so all that to say, I think the psychological upside is definitely 1%. And on the downside, we need to look at what was the 74-day moving average, around 70 basis points. And so it would be nice to get some narrative around that. But with the opposing stances at the Fed, it's hard to see what's going to make us break out of that range.
Yeah, we were talking about opposing stances at the Fed. We were talking about some of the opposing stances related to some of the fiscal funds that are available in terms of, again, that have been appropriated. We've heard from Treasury Secretary Steve Mnuchin. It sounds like he wants them back. Let's talk a little bit about, ultimately, I guess the question I would like to go to next is, does the news that the Treasury could be pulling back some of these lending facilities that have been appropriated, does it now create or kind of light the fire underneath lawmakers to provide that stimulus? And I guess ultimately, Larry, when do you think that we can expect some? Is it truly a matter of when, not so much if?
Yeah, no, I think you hit the nail on the head. I mean, I think it's going to stimulate stimulus at some point. It's going to have to, because certainly the news that came out that potentially allowing the expiration of corporate credit facilities and liquidity in the muni market, et cetera. I'm sympathetic to both sides of the argument, but it's not very good to the market. However, the market seems pretty muted this morning, so it seems like it's factored in that something's going to give, and it's going to have to give soon. And we're sympathetic to both sides of the argument, but with regards to maintaining the facilities to the end of the year or introducing some sort of fiscal stimulus, I really think that's baked into the market. Otherwise, our opening today would be a lot different than what we're seeing right now.
I like what you said there in terms of something's got to give, and it's got to give soon. One could argue, I mean, when you look at the dollar, I'm wondering if that's going to be the epicenter of that give. And I guess, will it happen soon is more difficult to discuss or figure out. I mean, I'm not going to ask you to predict the future here, Larry, but ultimately the dollar certainly has been the hub. And as I've been saying, many of the spokes in this wheel have been connected to it. We've been watching this thing trend lower off the 104 handle. It's holding near these lows. Certainly seems poised for a nice move one way or the other, I guess one could argue.
Yeah, and I continue to be a intermediate to long-term dollar bull.
Okay.
Maybe not short-term and right away in the next couple of weeks, but I think overall, is the dollar's movement being hinged upon any kind of stimulus? I think the answer to that is correct. Real yields have gone modestly higher. That's definitely affecting it. But at the end of the day, I think our growth pattern versus the other majors is going to excel into 2021. So it's hard for me to make a case for the dollar moving lower against the majors in 2021. I know I could be dead wrong about that, but I think it's all relative, and I think we have a big head start.
All right. Ultimately, the dollar weakness that we have been seeing, whether it continues or not, again, we could argue that for a little while here, but no need. Only time will tell. I mean, the weakness we've seen there has helped commodity prices get lifted. We're going to take a look at some charts here in a couple minutes. You got beans, which continue to rally. You've got copper, which has been holding bid. You could tie it to some of the other fundamentals if you want to as well, but certainly the weaker dollar hasn't hurt. Yet crude kind of telling us something a little bit different. I guess I'm wondering why you think some of the hesitancy hesitancy there. Crude, for the most part, has been holding a very tight range, 45 to 35 for months now, and not really signaling the same enthusiasm we're seeing not only in terms of copper. I mentioned beans here. Again, maybe other fundamental ties there, but certainly not the enthusiasm we're seeing in the indices here.
Yeah, exactly. And they all have really fascinating narratives. I mean, with crude, I think all eyes are on the OPEC Plus meeting November 30th and December 1st. I mean, are they going to taper with 7.7 million barrels a day? They've done a wonderful job at being compliant, or relative compliant, but there seems to be a lot of noise that suggests otherwise. That compared with the wild card of global growth. I mean, what's happened this year is historic, down 4%. Consensus seems to think that we'll have positive 5.5% global growth. If that's so, then WTI should be trading perhaps $10 higher than where it is right now, and that would be a real indicator of growth. Copper is a very similar story, except we have to remember that the Chinese economy, the industrial side, has been doing very well as of late. Also, copper is a big factor within their stimulus program. So I continue to be long-term positive on copper, but be very careful giving us knee-jerk reactions to various stimulus or stimuli.
Yeah. We've got copper. A minute ago, we just looked at, or a second ago, I should say, copper relative to the energy markets, the crude. You can see quite a divergence, but if you look at copper relative to the ES here, you can see that they've been tracking each other very closely. I wanted to get your thoughts here on a couple things real quick, and then we're going to let you get on with a very busy day here to close out a week. But let's talk a little bit about gold. It's been holding above key support for the gold bulls, at least to this point, that 1850 level. I think a lot of people have their eye on, but with the dollar holding at these lower levels, I guess one could argue that gold should be higher, Larry.
Yeah, I humbly disagree. Maybe that's because I continue to put a lid on the price of gold, or try to. But, I was wrong 100 points higher. So I continue to think.
Like that.
Yeah, I mean, I was short gold all the way up there, so that did not feel good. But with, real yields going modestly higher, with the safe haven aspect, if there is any, with regards to gold's kind of evaporating. Yeah. I just think it might be in a short-term stumbling pattern. But I know I'm not consensus, but I do believe gold will continue to drift lower. Not going to be easy to remain short it, but I just don't see the prospects for it going, above. Right. Yeah.
Larry, lame duck session. We've got a holiday coming up our way. The next couple weeks, I mean, things could kind of settle down here a little bit, especially if we continue to get good vaccine news. And if investors express their willingness to kind of just digest some of what has been this year, what are you looking for into the next couple weeks, into the next 6 weeks, I guess I should ask, as we head into the end of the year?
Yeah, for me, it's really all about the Fed. I mean, liquidity, Main Street lending, bailouts, grants, like what's going to happen? And there are some very sharp opposing forces at the Fed. And, from a pedestrian viewpoint, I'm very sympathetic to both sides of the argument. But what's that going to do to the Treasury market and hence the rest of the markets around? So I would just keep a really close eye on treasuries and watch that breakout along with crude. That's another one, just a better indicator, or I guess a quicker indicator to short-term global growth. And so keeping WTI in the mid-40s would be really solace to me. Right now, it's in no man's land, low 40s. We got OPEC coming up. There's a lot of good stuff that's going to change the narrative over the next few weeks.
All right, we'll watch the Fed. We'll keep an eye on crude oil to see if we get some upside momentum, signaling, again, continued optimism. We'll also keep an eye on the indices as well. Larry Shover, really appreciate you joining us.
Thank you.
Breakdown there, and have a wonderful weekend, Larry. Ladies and gentlemen, Larry Shover joins us from Exchange Capital Resources.